the last couple of days I really was relaxed and took the couple of days off, fully sleeping, going to the beach. And luckily enough today, it is raining dogs and cats out there. I don't know, we're 1,000 miles away from Florida, but it seems we're getting serious hurricane kind of weather here. I can't even see the beach out of the window. But at least I'm not missing anything. I'm enjoying your company. So, to start with, all of you know, of course, it is a holiday in the UK, and the US market is extremely slow today, which seems to coincide very well. Nobody wants really to take any direction and move in preparation or whatever is happening in Europe. So let's start. As always, we start, and we have a couple of newcomers with us today, Brandon, and so the first thing we do, we always look specifically when we're dealing with foreign exchange. We deal with foreign exchange in a different way here. Since we're dealing with two currencies, we're dealing with euro, dollar, euro, pound, euro, Aussie, whatever. So you're dealing with two. You buy one and you sell the other. So primarily you want to focus on buying the strong currency and selling the weak one. And as usual, we match the strongest pair or the strongest currency basket of currencies against the weakest. So this is the index, and that's the first thing we look at is the dollar index. And as you can see that technically we are, if I put this as a weekly chart, yes, the major trend for the US dollar is to the downside, and we have been lately, over the past several weeks, attempting to have a structural failure breakout to the upside, and the major trend changing point for the US dollar, so that we can say we have a bull market in the US dollar, would be a trade above the 84.07. For the last couple of weeks, since June, we made a couple of attempts. One attempt that failed, and it came back and tested the 81.39 structure that we have here, and we made the second push up to attempt to trade above the 84.07, which also was met with selling, because it is a structural point, and a structural point does what it's supposed to do. It is a decision making point where selling comes in. The key factor here is that once we had the selling coming in, and this is a weekly chart, we came back and tested the same low that we had here, which is the 81.39, and we traded as low as 81.22, and then we came back above that. This in itself is let's say, call it a neutral sign. It is not a sell signal, because if this was a genuine selling, like what you see over here, we would have penetrated and capitulated. All the sell stops that are sitting below the structure point would have been triggered. But we didn't have that selling. What we had was the next day it came back above the 81.56, and this is today, this is Monday, this is the holiday, so we're going to use that, take that Monday with a grain of salt. And as you can see, we're pretty much in an inside day. So this is kind of a neutral. We did have momentum to the downside, so I'm looking for possibly a one more push to the downside to retest the 81.56. So the bias for the dollar this week would be negative to slightly, so it's neutral with a bearish undertone. So I'm more looking to be, let's say, short, if you will, the US dollar if I have a real strong currency. I'm not going to be shorting the dollar haphazardly. I'm going to pick the strongest currency to short it. Vis-a-vis the other currencies, either I will be on the sideline and I will use other pairs, but only against the strong currencies. So I'm going to be neutral to slightly negative. Okay? The other currency I'm going to look at is the euro dollar. And again, this is the basket of the currencies. Right here on the euro, we have broken above that structural point. Which appears on the index as 124.40, but as you might know, when we go to the intraday, it is 125.49 or something like that, and we are above it. And we had this 1, 2, or 3 days push to the upside. We had this slight pause. So having this kind of a move above the structure, as long as we're above the structural point, our bias is still to the upside. We should be looking for a push higher in the euro, and as long as it's above, again, it's not yet a trend change, but we do have a structural failure and we need a more push again to the upside. So the bias for the euro is to be long rather than short. And we do, as I said here, we're above a structure point. We had 1, 2 days of momentum, a pause. We need one more push to the upside. So putting back the chart of this, so that we can say for the euro, we can be slightly positive on the euro dollar. Okay. The next one we're going to look at is the Swiss franc. And as you can see, the Swiss franc is a mirror image of the euro, with one major difference. The major difference is this. If you take the structure point here, which is the 103.65, that would correspond or be similar to the 124.40 on the euro dollar. Let me show you. The 124.40, so that is pretty much similar to the Swiss, but take a look at the other structure here, which is the 126.55. We have some distance between the price action now, which is 125.15, and the 126.55. If I go to the Swiss, you would see that we did come and test that structure point, in this case what corresponds technically which is the 104.67. As you know, that this pair is kind of trading within a band, the euro and the Swiss. So that might give us some sort of a heads up that there is a possibility that the euro should make one more push towards the second structure, which is the 126, and this one here having one pause. We may be looking for another retest of that high, which is the 104.67. So we are going to consider the Swiss also as a slight positive. Okay, now we're going to go to the la creme de la creme, the one that has a signal for us. This is the Australian dollar. As you see, we are trading now below the 103.89. We do have a similar structure point on the cash, and we are below that. In itself here, is a structural point, and it is a short, and that is a sell signal as far as we're concerned. As long as we're below the 103.89, we need to be selling the Australian dollar. And if you look at the weekly chart, that structural point, the 103.89, based on the index, has been every time, once, twice, 3 times, 4 times, and we are now at the 5th time it comes back below this. So we should be looking at least for another push towards the 101.54. So the one pair with a clear sell signal for us is the Aussie dollar. So this is going to be the pair we're looking to be selling. Okay, and then now we're going to go to the British pound. The British pound is in serious la la land. I mean, it is absolutely has no real direction. It is coiling inside of a coil, and it's forming triangles inside the triangle, and this here is the latest one. We had a break above the structure, which is the 157.36 based on the index, but the structure that we have on the spot cash is the 157.82. We are above that structure point. We had one day in momentum, and then today is the 3rd day of decline. So it seems that we're having minor structural failures and stuff like that, but we're still inside a big coiling, something that's going nowhere since 2009. For the last 3 years we have been in this very narrow range. So we can trade it again by buying some support and selling some resistance. We will look for a reversal signal at the bottoms, and we take it for a small move to the upside, and then we look for a reversal signal and sell it down. This is where you are in a range bound currency and you trade it as such. So the pound is pretty much non-directional, so we will trade it as if buying support and selling resistance based upon the rules. So the pound is going to be pretty much like the dollar. Again, it's going to be more range bound, and we will trade it as such. Last but not least is the CAD. And that is a good currency. Looks quite interesting. Looks I didn't do the yen yet. And it looks pretty interesting and it looks pretty strong. We are above the structure. We're pushing higher. We had a pullback, and now even today, even though it's a holiday, it is the only currency today that is showing us some strength. We're above the previous daily high. We are pretty much near the high of the last 3 days. So that should give us a view of buying the Canadian. And if you look at the weekly chart, we're above the structure point, which is the 99.86. That's based on the index, not the cash. So the CAD is a currency we need to look at buying. And I think, Brunhild, this is music to your ears because you like the CAD. Alright. Last but not least is our dear friend, the Japanese yen. We take a look at the daily chart first. So that we don't get confused, let's not get misdirected, if you will. This is the yen as well as the Aussie and as well as the Canadian are the 3 strongest currencies technically and fundamentally. The Aussie, we have a sell signal, so we're going to get a liquidation. We're going to take some profit on it. The CAD is resuming its uptrend. This one here is trading now this week at the 107.08. The structural point to the upside for it to resume the upward move is 107.37. And as we stand here today, on this week or a holiday day, we do have a buy signal for the yen. This is a buy signal. If I put the chart of the weekly, yes, we are pretty much range bound, but we're nearer to the upper side of the range. That is, even though it's a pretty tight range because today is a holiday, but nobody's selling it. This is a pair that nobody is selling. So we'll be looking at, again, buying the yen, specifically if it gets above the structural points in the corresponding currencies. So, to choose our pairs, the yen is going to be 1 plus. So the way we're going to be looking at it, first of all, I'm going to look at the Aussie. I want to be short the Aussie. So the first, I will be shorting the Aussie, and of course the first one I have to take is the Aussie CAD. That will be the first candidate, going short the Aussie CAD. I also want to be looking at getting short the Aussie dollar, as long as it's below the structure. I also may look at the Aussie Swiss. One second. I want to be looking at the Aussie Swiss, and I can be looking at the Euro Aussie. So I'll be looking at going short the Aussie CAD. I'm looking at shorting the Aussie dollar. I'm looking at shorting the Aussie Swiss, and I can go look at shorting the Euro Aussie. I'm sorry, going long the Euro Aussie. The last of the Aussie pairs I need to look at would be the Aussie pound, unless I get a buy signal. Okay. The other one I want to be looking at is the CAD. I want to be looking at maybe the CAD dollar, going short the dollar CAD. We can do something with the pound CAD and the pound Swiss. The only warning I have to say here is that if you're going to be trading the Aussie pairs, so this means you're going to go short the Aussie and long the pound, for example. Let's say you decided to do that, and then you have another trade in the CAD, in the pound CAD. Just make sure that you're always having your positions correctly. So you either short the pound across the board in every pair, or you long the pound across across the board. You do not want to create a synthetic position. So you must be careful not to create a synthetic position. Okay? So now we're going, as I said, going Aussie CAD, Aussie dollar, pound Aussie, Euro Aussie, and Aussie Swiss. We're going to take the yen with the Aussie. We're going to take the yen pairs with the CAD yen, and we can take the Euro yen and the Swiss yen. We're going to leave the pound yen and the dollar yen until we get a better trade. Okay, so these are the selection of this week, focusing primarily on the Aussie from the short side, and focusing on the CAD from the long side, and then taking with it the Euro and the Swiss. All right, so let me save the recording, and if you have any questions, feel free